Hello and welcome. You're watching Market Cafe right here on ET Now. I'm Shrishti Sharma and with me as always is Kanishka Sarkar. And viewers, this is the show where in the next 1 hour, we're going to be taking you through all the top stories that we are tracking this morning. Get you ready for today's market action. But the big event, Kanishka, has been the FOMC meet.
Absolutely,
and the
Shrishti.
market seems to be digesting the fact.
Absolutely. You know, it was actually a very mixed day that we saw on the Wall Street. It digested that flood of earnings from the tech front as well as the comments that came from Fed Chair Jerome Powell. First up, let's take a look at how the indices fared. Now, the Dow Jones Industrial Average, that slipped about 74 points or about 0.2%. Briefly, this is after touching a record high during the session earlier. Now, S&P 500, that ended nearly flat, whereas the Nasdaq Composite, that added 0.6%. That was supported by gains in select technology names. After the bell, focus shifted to tech earnings. Like I said, Alphabet surged around 6% in after-hours trade following strong quarterly results that highlighted momentum in its AI and cloud businesses. However, Meta Platforms, that actually tumbled about 8% despite posting its fastest revenue growth. The social media giant said that it took a one-time $15.9 billion charge linked to President Trump's one Big Beautiful Act, which it warned would impact future federal tax payments. Other than that, Microsoft shares also slipped about 4%. And on the macro front, meanwhile, the Federal Reserve has cut its benchmark rate by 25 basis points, setting the new range between 3.75% to 4%. That's largely as per expectations. Meanwhile, Jerome Powell cooled hopes for another rate cut in December, saying it is far from the foregone conclusion, prompting some caution across the market. And looking ahead, investors are now turning their attention to that high-stakes meeting due between President Donald Trump and his Chinese counterpart Xi Jinping. So all eyes on that, Srishti. But I'm sure lots of impact on the oil and gold market as well on the back of this Fed development.
Well, indeed, Kanishka, a bit of a certainty coming into the markets, and the safe haven demand is seen to be taking a bit of a backseat. That's what we are getting to see on the gold prices especially. But before that, a check on the crude, where we have seen a bit of a stabilization kicking in on the crude oil prices. Brent as of now is trading with a mild gains at $64 per barrel mark. But when it comes to the gold prices, like we highlighted, that seemed to be powering its gain that we have seen of late. Now crude is trading below that $4,000 per ounce mark, and definitely we are seeing a bit of a correction from those higher levels. Just yesterday as well, we have seen gold making a bit of a U-turn. But along with that, its dollar index as well, that is also showing very interesting moves. Dollar index has seen of a bit of a surge, trading around that $98.9 odd mark. But definitely the big event for today is going to be the meet of President Trump and Xi Jinping. So that can definitely make a hit, not just on the equity market, but also on the likes of dollar index as well. So all eyes on that.
Absolutely. So the big impact is what we are watching out for after the Trump and Xi meeting that's due later today. But moving on, let's also get you some more top developments that we're tracking on the global front. And first up, of course, the Federal Reserve has cut interest rates by again 25 basis points, lowering its benchmark range to 3.75% to 4% by a 10:2 vote. This while signaling uncertainty about future easing. Chair Jerome Powell said that it's too early to assume another rate cut next meeting. It is also, Fed also has plans to end quantitative tightening in December. That's the word coming in. In fact, policymakers cited rising risks to employment and elevated inflation near 3%, even as key U.S. economic data remain unavailable due to the government shutdown. Now, listen in to the comments coming from Jerome Powell.
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
All right, moving on to another big story, and that's about Nvidia. That has become the first company ever to hit a $5 trillion market valuation, cementing its dominance in the global AI boom. Now, shares rose 3%, fueled by $500 billion in a new chip orders and plans to build 7 US supercomputers. Now, the milestone underscores Nvidia's transformation from graphics chip makers to AI powerhouse and comes as Donald Trump prepares to discuss Nvidia's advanced chips with China's Xi Jinping. Now, CEO Jensen Huang's wealth also soared alongside the fantastic rally that we have already seen in Nvidia.
That's right. Let's keep it with the US tech space. Then now Meta shares, they tumbled about 9% despite beating third quarter sales expectation. This as the company booked a massive $15.9 billion one-time tax charge that was linked to Trump's new tax law. Now Meta raised its 2025 expense forecast to as high as $118 billion and posted another $4.4 billion loss in its Reality Labs division. While daily active users hit 3.5 billion, investors focused on rising costs and slower headset sales, even as Meta's AI glasses sold out through November.
But Alphabet, that was the counter that has hit a major milestone, topping $100 billion in quarterly revenue for the first time, with strong results across its businesses. Now, both its revenue and earnings beat the estimates. Google Cloud revenue surged 34%, supported by soaring AI demand. Alphabet also raised 2025 capital spending to as much as $93 billion as it expands data centers to meet enterprise AI growth.
All right, the biggest global news today, US President Donald Trump says that he may cut fentanyl-linked tariffs on China as he prepares to meet Chinese President Xi Jinping in Busan today. The talks are their first since Trump's return to office come amid renewed trade tensions. Now, Trump says that discussions could cover fentanyl flows, US farmers, and possibly Nvidia's advanced AI chips as well. Beijing has confirmed the meeting but has given no details so far, saying that it hopes for positive outcomes out of the meeting. Trump has added that Taiwan may not be on the agenda as far as their meeting is concerned.
But with this, let me take it across to my colleague Sumita Karir, who is joining us with more details on the same.
Well, Donald Trump is expecting a great meeting with Chinese President Xi Jinping, even as his Asia tour is reaching grand finale. A Chinese foreign ministry spokesperson said that the country is willing to work together with the US to ensure that this meeting yields positive outcomes. In fact, remember, this is a high-stakes meeting that Donald Trump is having. This is the most important meeting that he's having as part of his South Asia tour. This is the first meeting that is happening between Donald Trump and Xi Jinping as part of Donald Trump's second term. Remember, these are the world's two largest economies which have been struggling to resolve the protracted trade conflict, which has also seen triple-digit tariffs being imposed upon each other. However, there's been a truce of late between both the sides. So what are the key issues on the table? Well, for the United States is going to be de-escalation of trade tensions, fentanyl flow from China into the United States, easing of expanded export controls on rare earth materials, which has been a cause of concern for US, given that many of its industries are getting impacted by those export restrictions. And then the issue of soybean imports into China is also going to be likely brought up by Donald Trump, given the fact that China has been the largest buyer of US soybean. It reached $12.5 billion in 2024, but it got halted in May. And then Chinese purchase of Russian energy is going to be another concern from the United States side. For China, the bigger concerns remain US's restriction on exports of AI chips, advanced technology, United States position on Taiwan as well, and then, of course, the fees that's being charged for Chinese-built ships for docking at US ports, and, of course, the finalization of the TikTok deal that got signed, that got finalized, but what is going to be the layout of that, that is going to be looked at by both the sides. So this is something that, of course, global markets are also watching, economy watchers are also having, given the fact that the ramifications that these talks will have on the global economy.
All right, thank you so much, Sumita, for getting us all those details. Those are the live visuals that we're getting to see on the big meet and the big event that is awaited, and we'll definitely keep you updated more on that. We're moving on to another news flow wherein Prime Minister Narendra Modi pitched India as a steady lighthouse for the world amid the global tensions, trade disruptions, and shifting the supply chains. Now, India stands as a symbol of strategic autonomy, peace and inclusive growth, Prime Minister Modi said, addressing the Maritime Leaders Conclave at the India Maritime Week 2025 event in Mumbai. Now, India's vibrant democracy and reliability are something which makes India special, Modi said.
साथियों, भारत आज ग्लोबल स्तर पर सप्लाई चेन रेजिलियंस को मजबूती देना चाहता है। हम वर्ल्ड क्लास मेगा पोर्ट्स के निर्माण में जुटे हैं। यहां महाराष्ट्र के वाढवण में ही 76,000 करोड़ रुपए की लागत से नया पोर्ट बनाया जा रहा है। हम अपने मेजर पोर्ट्स की कैपेसिटी को 4 गुना बढ़ाने के लिए काम कर रहे हैं। हम कंटेनराइज कार्गो शेयर में भी भारत का हिस्सा बढ़ाना चाहते हैं और इन सभी लक्ष्यों की प्राप्ति में आप सभी हमारे अहम पार्टनर हैं। हम आपके आइडियाज, इनोवेशंस और इन्वेस्टमेंट का स्वागत करते हैं।
All right, so those were some of the top global stories that we were tracking this morning. But on that note, we'll take a very short break, and on the other side, we'll tell you how Asia Pacific markets have opened up. Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Well, time now to take a look at how Asia Pacific markets have opened up this morning. And tracking the Wall Street, it's a rather mixed day coming in on the Asia Pacific front as well. Let's take a look at each of the indexes. First up, S&P ASX 200, that's trading in the red right now, down about 0.1% at that 8,900 odd level. On the other hand, Hong Kong's Hang Seng Index, that's the one that's trading in the green. It's up about 0.5% right now at that 26,472 odd level, more than 100 points of gains coming in there. Meanwhile, Japan's Nikkei, that's actually trading in the red. That's down about 0.5% at that 51,000. It's actually, given up those losses and it's trading absolutely flat, but still with a negative bias at that 51,293 odd level. On the other hand, China's Shanghai Index, that's also trading in the red. It's down about 0.1% at that 4,000 level, largely flat, but yes, with a negative bias right now. South Korea's Kospi Index, that's also trading with a negative bias itself, down about 0.2% at that 4,000 odd level. So yes, a mixed day coming in. So far, only Hang Seng is holding out in the green. It's up more than 100 points. Other than that, all the other Asian indices, they are managing to trade in the red itself. Not major losses over there, but still trading with a negative bias. If we talk about the Nifty, we did manage to end above that 26,000 level. So yes, sustaining that level. But as far as today's trade is concerned, Nifty implied open is suggesting a start in the red, down about 0.3% at the open. That's the indication that we are getting as of now. But yes, let's see how we open. So far, that Asia Pacific trend is likely to continue in the Indian markets as well, Srishti.
All right, that's likely to continue indeed. But the fact of the matter is that just yesterday we managed to close above that 26,000 mark for Nifty 50, and even Nifty Bank had a good day indeed. But let me take it across to Snehi for the market wrap.
Well, yes, all in all, a good day of trade once again for the Indian markets. A 0.5% uptick on the Nifty, and above that 26,000 mark, we finally managed to stick on over there. Sensex to 0.5% uptick coming there. The Nifty Bank was up 0.3%. One of the least gaining sectors, but nonetheless has managed to close in the green. The broader end of the market also provided some solid support, with Nifty Midcap up 0.7% and the small cap index in tandem with the market with a 0.5% uptick. From the Nifty 50 group of stocks, Power Grid, NTPC, Adani Ports, HCL Tech, Shriram Finance, all were gaining anywhere between 2 and 3%, so good move on that front. On the flip side, weaker than expected numbers from Coal India made it the top Nifty loser, almost a 2.5% cut over there, followed by Dr. Reddy's, BEL, Eternal and Hero Moto. If you take a look at the sectoral performance, Nifty Energy, top sectoral gainer in terms of a 2% uptick on an intraday basis, followed by Metals, Media, Pharma, FMCG, IT, Realty, and Nifty Bank and PSU Banks at the bottom rung of that ladder of top gainers. But on the flip side, Nifty Auto was the only sector that closed in the red. So it was names like SAIL, NMDC, Hindustan on zinc and Hindustan Copper that's once again ruled the Nifty index charts. But on the flip side, names like TVS Motor, M&M, Maruti, Hero Motor, Eicher were in deep pressure from the auto index. All in all, some stock buzzers on the back of exceptional earnings. Blue Dart, 20% upper circuit for that stock. Varun Beverages on their Alco-Bev plans and expansion into South Africa on the back, with alcohol. A 9% uptick coming over there. Adani Green, 5-star business, also good set of numbers, 15.5% uptick over there. The frenzy for Aditya Birla Realty continues. That stock was up 7.5% along with Graphite India, M&M Finance, NBCC, Adani Energy, RDC on their guidance, Sapphire Foods, CG Power, MRPL. All of these stocks did exceptionally well for themselves. Well, you also had some stocks that were deeply under pressure, but the market move overall was quite positive. And well, yes, all eyes are going to be on how the monthly Sensex expiry is going to pan out.
All right, so that was about the Indian markets. But from markets, let's...
Welcome back to Market Cafe right here on ET Now. In shifting focus then, and CASA's Heirs CEO Vinay Dubey elaborated on the recent DGCA audit report and also touches upon the company's growth outlook going forward. Now, he says that they are confident of uninterrupted aircraft supply and also says that they are well on track for their IPO launch in the next 4 to 5 years. Let's listen into an excerpt of that conversation.
So typically, airlines per aircraft require anywhere from 6 to 8 captains and 6 to 8 first officers, typically. Smaller airlines with less dense networks require a little more. Larger airlines with very dense networks require a little less. Airlines that fly internationally a lot and especially internationally overnight may require a little more. Primarily domestic airlines might require a little less, which is why I'm giving you this range of 6 to 8 captains and 6 to 8 first officers. So you can, the math after that is very easy in terms of the number of pilots that we would require.
Give us a sense that if you operate a single aircraft, what is the strength that you, as of now, you need it? And maybe if not sharing the detailed number, but still the larger picture in terms of the availability of the crew and pilot that you want to have in maybe next 2 or 3 years.
Yeah, no, this is a regular exercise. Let me shed some light on this. So, some of the reporting, I think, has so far not shed the appropriate light. So I appreciate the opportunity that you have given me to actually, clarify the air. So first, this was not a single audit. This was a summary report we got of all spot checks, audits, and observations that the DGC had carried out over the last 9 months. It was a report that didn't just go to Akasa, but similar reports have gone to the other airlines as well, is what we have been made to understand. So first and foremost, this is, and by the way, when I'm talking about observations, audits, these are over 75 audits and observations and spot checks have been conducted, and I'm guessing similar or even larger numbers of audits and observations and spot checks have been conducted for the other airlines in India because their networks tend to be larger. And we've been made to believe that others have got very similar set of findings as well. Now, secondly, you use the word action. There is absolutely no action associated with this. These are findings that have been provided to us and other airlines. For Akasa, I can tell you 100% of these audit observations have been closed with the regulator, right? 100% of these observations have been closed to the regulator's satisfaction. There is no further step, no action, of any sort associated with it. Now, with the other airlines, I can't tell you whether they've got any audit observations open or not, but I can certainly tell you with Akasa that 100% of these have been closed and that they are part of, a series of routine, audits, spot checks, and observations.
So basically, you are indicating that when it comes to the safety matters, everything is okay with Akasa?
I'm indicating two things. One is at an overall aggregate level, we believe Akasa is built a platform of world-class safety. So I wouldn't use the word okay. I would, go beyond that and say that Akasa has built, we're a team of aviation professionals. We've got jet fuel in our blood. Aviation is paramount. It is the number one responsibility that we have and the highest priority. And we're building and will continue to build a platform of world-class safety. That's point number one. Point number two is, as you are building this platform of world-class safety and as you're building a safety culture, you have to be open to feedback and continuous improvement, which is what our regulator has given us. And therefore, we take it very seriously, and we've acted and closed 100% of the observations that have been provided.
All right, so that was ET Now's exclusive conversation with Akasa Air. But moving on, now the biggest investors and global corporate leaders are betting big on AI. At the FII 9 Summit in Riyadh, now the big takeaway is AI is here to stay. You either ignore it or embrace it. Hina Gambhir has been at the thick of all important conversations related to AI. She takes us through the highlights of the summit.
This is day 2 of the Future Investment Initiative Conference here in Riyadh. This is the 9th edition. The theme is the key to prosperity. All the discussions that have taken place so far and the conference, to sum it up, I would say that artificial intelligence seems to be becoming non-negotiable for corporates, for investors. Can we ignore AI today?
I think you can't ignore AI. AI enables intelligence at scale. And so to be able to provide that to humans is something that's going to be around with us for the future. So you absolutely can't ignore it.
What is the key to prosperity?
I think as AI advances and there are jobs that will be done differently, you can't leave people behind. So you have to ensure those people have the skills and the opportunity to find new opportunities in the future to bring everybody along for that prosperity.
Well, absolutely. There are some concerns around AI as well that were raised during the discussions on day 1. Fear it or embrace it. The choice is yours. AI is here to stay. It is the future. It is going to be extremely important to solve the problems of tomorrow. That was the kind of sense we got after listening to the discussions here, after listening to leaders from across the world. In fact, we also had World Labs founder and CEO who highlighted that how AI is going to greatly enhance human capabilities, and the most effective approach is going to be collaboration. Collaboration between human beings and AI. They need to work together. But there were people like former Google CEO Eric Schmidt as well, in fact, who raised an important concern too. While technology creates immense opportunity, he said, the benefits are often concentrated among a few firms or a niche or a few nations. So that is something that's going to be quite challenging, and the responsibility is going to lie with the leaders of countries, leaders of organizations to ensure that their people are prepared to embrace this new era of innovation fueled by artificial intelligence.
And on the sidelines of the 9th edition of Future Investment Initiative, Sir Martin Sorrell, the chairman of Board of Directors of S4 Capital and the founder of advertising giant WPP, was in conversation with ET Now, Sajith Mangat. He spoke about the impact of AI on the advertising space, employment and manufacturing. The advertising guru also touches upon India's potential for growth in the space of technology. Listen into a slice of that exclusive conversation.
There are two industries really, digital, which is exploding, and you see that in India, and continues to grow, 700 billion, growing at 10, 15, 20%, and traditional declining, getting under pressure. The overall industry is growing. Last year it was $1 trillion. This year, between those two, it'll grow by about 7-8%. So it's not falling, and then it's dominated by the platforms. Alphabet at 250 billion, Meta at 150 billion, Amazon at 60, and TikTok outside China at 40. So those four platforms alone are half the market, 500 billion, and they are 5/7 or 70% of the digital piece, the 700 billion. So it's not declining. It's the traditional piece.
Media, means as we know it, but do you see revenue monetization happening in a bigger way in digital medium as compared to traditional?
Well, you know, we were talking before we started about the impact of AI on our business. So it impacts it in terms of visualization and copywriting. That means the time that it takes and the cost of creating content, that's collapsing, right? So you have to shift the model from revenue base to output. You know, how many assets do we produce for you or for the client? That's one thing. The second thing is personalization at scale, the Netflix model, as I call it, on steroids. So using first-party data, that is consented consumer data that clients have, using that data with the signals from the platforms to personalize community. You like cricket or you like football, we'll tailor ads for you, which, you know, have a cricket theme or a football theme, whatever it happens to be, or you're moving house, so we serve you with ads that, you know, for when you're moving house, whatever it happens to be. That's the second big area. The third big area is media planning and buying, automating that at scale. That $1 trillion that I mentioned, the $700 billion in digital, $300 billion traditional, and analyzing that as you would if you were a fund manager with equities or property or crypto or gold or private equity. What's my mix? Use algorithms for that. Our industry is still manual. General efficiency, like we're working with some Indian companies on how they can do outside broadcasting. We're doing it with AWS, with Nvidia and Adobe, how we can reduce the cost of outside broadcasting by 80 or 90% using AI and the cloud rather than trucks. And then the final area is what I call democratization of knowledge, where we spread knowledge through the firm and reduce the layering. You know, Jensen Huang, the CEO of Nvidia, has apparently 51 direct reports. He doesn't do one-to-one meetings. He sets KPIs. So, and the reason is that they can spread knowledge using AI throughout the organization, so everybody understands. Because what happens inside companies is they become very siloed, agencies as well, and people maintain their power base by controlling information.
All right, so as you can see on your screens, these are the live visuals coming of the Trump and Xi meeting, and it's a very significant meeting for the global economy and for India as well. The two leaders are expected to, talk about the tariff deal, which has remained a point of contention for both the countries, and we also need to see what impact it is going to have on India. Now, India's trade deal is yet to be signed, and we are currently facing those additional 50% tariffs. And following the trade deal with China, which is likely expected following this meeting, let's see how the kind of impact that India is going to see. And yes, a very important meeting there, as far as rare earth metals and agriculture and all of those sectors are concerned. So yes, a very important meeting, and those are the live visuals that you can catch on our screen. All right, we'll get you more.
All eyes are indeed on the big event for today, and that is the Trump and Xi Jinping meeting. And definitely what sort of an outcome we get to hear on the trade, as well as what are the key developments, is something that we will be tracking. But these are the live visuals that we are getting to see. But let's head across to the presser that is underway.
We'll be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now. But President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time. And it's an honor to have you with us. Thank you very much. Thank you.
President Trump, it is a great pleasure for me as well to meet you. And it feels very warm seeing you again, because it's been many years. Since your re-election, we have spoken on the phone 3 times, exchanged several letters, and stayed in close contact. And our joint guidance, China-US relations have remained stable on the whole. Given our different national conditions, we do not always see eye to eye with each other, and it is normal for the 2 leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-US relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-US relations. I always believe that China's development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together. Over the years, I have stated in public many times that China and the United States should be partners and friends. This is what history has taught us and what reality demands. A few days ago, in the latest round of consultation, our two economic and trade teams reached basic consensus on addressing our respective major concerns and made encouraging progress. This provided the necessary conditions for our meeting today. Mr. President, I am ready to continue working with you to build a solid foundation for China-US relations and create a sound atmosphere for the development of both countries. Mr. President, you care a lot about world peace, and you are very enthusiastic about settling various regional hotspot issues. I appreciate your great contribution to the recent conclusion of the Gaza ceasefire agreement. During your visit to Malaysia, you witnessed the signing of the Joint Declaration on Peace along the Cambodia-Thailand border, to which you had provided input. China has been helping in our own way Cambodia and Thailand properly settle their border disputes, and we have also been promoting peace talks to resolve other hotspot issues. The world today is confronted with many tough problems. China and the US can jointly shoulder our responsibility as major countries and work together to accomplish more great and concrete things for the good of our two countries and the whole world. I look forward to exchanging views with you on questions important for our two countries and the world. Thank you.
Thank you. Thank you very much. It's great to have you all. Thank you very much.
Mr. President, why did you change your nuclear plans? Why are you going to be doing more nuclear testing?
Thank you very much, everybody.
Thank you.
Thank you. Thank you very much.
Thank you, press. Thank you, press. Thank you, press. Come on, let's go. Come on, thank you, press. Thank you, press. Let's go. Time to go.
I don't know what this is. Curtis over there.
All right, so that's some really important commentary coming from Trump and Xi. Both have expressed, very positive commentary, but we'll wait out for the trade deal and more developments on that front. But with that, let's take a step back and look at some of the earnings that are very key to watch. Now, L&T is a stock that is going to be in focus today. The company has reported a pretty good set of numbers. The revenue came in slightly below estimates, whereas margin was in line. PAT, on the other hand, was above estimates. Now, if you take a look at the fine print, consolidated revenue that has risen 10% on a year-on-year basis to that 67,984 crore rupees level. EBITDA has grown about 7%, whereas margins, they have come in steady at 10%. That's compared to 10.3% in the corresponding period last year. If you take a look at the net profit, that has actually gone up 16%, nearly 16% on a year-on-year basis. It's at 3,926 rupees. It's driven by strong execution. But if we talk about PAT, that stands at 4,687 crore rupees. That's due to higher income. Now, within revenue, international operations have contributed to 56%. Order inflows, that of course is the key highlight for L&T this time as well. Order inflows have come in at 1.16 lakh crore rupees. That's up 39% on a year-on-year basis. And now remember, nearly 2/3 of this order inflow is from the international market. Now, L&T's total order book stands at 6.67 lakh crore rupees. That's up 9% sequentially. Some very important commentary in the con call as well. First up, about the guidance. Now, L&T has reaffirmed its 15% growth guidance for the year. It has maintained that very conservative 8.5% margin guidance as well. And on the other hand, as far as the order inflow is concerned, it is very confident of exceeding that 10% guidance level. In fact, it has said that 2 lakh crore worth of orders is what it expects in the second half of the fiscal. Apart from that, very important commentary on the capex front as well. It says that it is seeing initial revival of private capex alongside increase in infra investments. So that infra investment trend, it says, is expected to continue in the third and fourth quarter as well. And lastly, the defense volumes, they are also expected to increase over the next few years on the back of government's Atmanirbhar push. So that's the word coming from L&T. So yes, a steady quarter yet again from L&T, though revenue did see a slight miss as far as the expectations are concerned. If you talk about brokerage commentary, mixed commentary over there. Goldman Sachs has maintained a neutral call but has revised the target price to 3,740 rupees. That's up from 3,540 earlier. It says that L&T's strong project pipeline of 10.4 lakh crore rupees provides a very healthy medium-term visibility. However, it remains cautious on slower revenue conversion, weak energy margins, and the company's significant 50% order book. Morgan Stanley, on the other hand, has retained its overweight call. So yes, that's about L&T's result. Slight miss on revenue, but overall a good quarter from L&T yet again.
All right, that's about the earnings, but the big event today remains to be the Trump-Xi meeting. That is still underway, and we have Sumita with us. And Sumita, believe that they are meeting after 6 years of gap. And the first question that after that press briefing that Trump was asked was on the nuclear announcement. Tell us more on that.
Absolutely. So that's one big announcement that has come in. And Shrishti, given by the constant updates that we're seeing, Donald Trump has indeed met with President Xi. That meeting is currently going on. And in fact, he's also tweeted, and I quote, "It's an honor. I think we're going to have a fantastic relationship for a long period of time. It's an honor to have you with us. We're going to have a very successful meeting," is essentially what Donald Trump tweeted and posted, before that high-stakes meeting has taken off. Now, let's understand why is this meeting important for both the sides, given the kind of protracted trade war that we've seen between both the sides, beginning from triple-digit tariffs earlier this year, and then, of course, has been sort of bringing down of those tariffs. However, the trade war continues. In fact, non-tariff barriers also is something that China has exercised so far as the United States is concerned. Port fees, the United States increasing on Chinese vessels parked, in its territory has been a concern that China has faced. Of course, fentanyl flows. Remember, that is something that Donald Trump has over and over again spoken about, even during his campaign trail, that fentanyl flows into the United States is something that he needs to stop, and he has blamed China for that. So, of course, analysts are projecting that that is going to be a key part of these discussions. Of course, a TikTok deal which got finalized and how it will be put into motion is also something that both the sides are going to be looking at. The Taiwan issue, well, that has been a thorny issue as well. So China is essentially expecting Donald Trump to take an opposing stance against meddling in the affairs of Taiwan. However, we did see Donald Trump mention about the Taiwan issue, before his South Asia tour began. So that is going to be a thorny issue, and how that gets addressed, or whether that gets addressed at all, that remains to be seen. There are some other issues as well for the United States. Well, soybean purchases, if you see, in 2024, Chinese soybean purchases, were at the record high, given the fact that China is the largest in fact, consumer of U.S. soya purchases. And of course, we've seen the kind of brunt that agri-farmers in the United States have faced, particularly with respect to whether corn or soya purchases. So definitely, this is an important part of agenda for the Donald Trump administration to get those purchases back, because China stopped buying soya purchases from the United States starting May this year as part of a non-tariff barrier, of course. And then you also have US's restrictions on AI chips, etc., is something that China will be keen on addressing. The technological controls that United States has put on Chinese technology, advanced technology, is something that both the sides will be looking at addressing as well. And of course, bringing down those tariffs. 100% tariffs are not happening. This is something that U.S. Treasury Secretary Scott Bessent essentially stated, that those tariffs are off the table, and we want, for this meeting to go well, we want the tariffs to come down. So it remains to be seen. Now, why is this meeting important? Because, like you rightly stated, that this is the first meeting that the Donald Trump administration and Donald Trump himself is having in the second, in his second term. More importantly, the outcome of this meeting will dictate how the global economy gets impacted. So that remains to be seen, whether there will be any concrete outcomes and the kind of concessions that China is ready to give to the United States.
Right. Thank you so much, Sumita, for that update. We'll keep connecting with you through the day to get us updates on the US-China trade deal front and more. But with that, here's a quick programming note. Now, the beginning of every month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments as well. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Behtar Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. Now, as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
All right, but for this viewers, it's time now to wrap this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team. Thank you so much for tuning in.